Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, good afternoon, good evening to you all. Hope you guys are doing well. Happy Wednesday.
Good morning.
Got a lot in store for you guys today, a lot of updates, as well as some really nice setups that are forming. Going to be going over a lot of pairs, and we're going to be taking some of the pairs that you guys want us to go over and doing some analysis on those as well. So you guys know the drill. Where are you guys from? Drop it in the chat. What pairs you guys are looking at. Would love to see where you guys are from and what you're looking at this morning to start this session.
Yeah.
Let's see. The trading challenge that we have been doing over the past month has now been complete. That ended today. So we will be announcing the winners to that trading challenge that we started in September on Saturday's live session, which will be our last live session for a little while. So be sure to tune into that one. You're not going to want to miss out on it. We're going to be going over a lot of gems, a lot of nuggets there for you all. EUR CAD, GBP CAD. I can talk about those today, sure. Gold. Man, people just don't get it. I don't trade anything but Forex, guys. I don't trade gold, don't trade NASDAQ, don't trade US 30, don't trade any of that.
It's a recurring theme.
Yep.
Light crowd this morning. Or quiet crowd, I mean. Where's everyone from? Drop it in the chat. Gotta wake up. Let's go. Good morning, Sean. Hope you're doing well.
Some of you guys need some coffee.
I know.
Wake up a little bit.
I need some coffee, but I'm still excited for the day. Texas, Rochelle, nice.
Portugal in the house, South Africa, Cali. What a early morning for you, Kellen. Good afternoon. Nigeria, Czech Republic, Prague, Australia, Jen and Jared. Good to have you on. I can see some familiar faces on here. Japan. Oh, good evening. Good evening. What's the difference between Forex and commodities? So Forex is, the currencies that are traded globally. So currency pairs such as the euro, the pound, the Swiss franc, Japanese yen, the Aussie, New Zealand. Commodities are stuff like gold, silver, coffee, soybeans. I mean, just anything that is physical that can be traded on the international markets. Usually it's back in the day for us in the US, it was the US dollar was tied to gold before we were taken off the gold standard in 1974, I believe.
I think it was 71 when Richard Nixon was president.
Yeah.
Bretton Woods Agreement.
Mm-hmm. Germany, Singapore, Nigeria. Good to have you guys on this morning. You have a lot of updates for you, a lot of exciting updates. So I'm really excited to get this live session started. We'll start in about 2 minutes. Just want to wait for a couple more people to trickle in. I know we'll have quite a few more come in as we get going here. Hopefully you guys have been having a good week so far. Halfway through the week. Can't complain.
They do. Commodities do follow smart money concepts. We just like to stick to what we know best, right? That what we're used to, which is Forex. I mean, I very occasionally will branch out, look at some opportunities on US 30 or gold, but that's just very rarely. And it's oftentimes, if one of our members asks us to kind of break down some charts on gold or US 30 for them, we actually do identify a setup. Other than that, we don't really care to look at it.
We like to stick to Forex because we like how Forex waves. We like the wave play. We like how smart money presents itself on those pairs. Smart money can be identified on any asset class over any market, really. But it's a little bit harder to distinguish on stuff like commodities or cryptos or stocks, in my opinion. I trade a specific way. Now, I'm sure that some people like you guys like to trade gold and US 30. And if you guys find a good strategy for it, then, more power to you. But for me, I do very well trading Forex, and that's just what I'm going to stick to. So Singapore, Germany, Ireland, Croatia, Philippines, Botswana. Good to have you guys on. Morning, Josh. Morning, Mateo, RJ, Eric, Jay. Good to have you guys on this morning. All right, we'll go ahead and get started. It's about almost 10 after 8 a.m. Eastern, about an hour before New York session kicks off. So a couple updates before we get started. We the trading challenge that we started on September 12th, so a month from today, was just wrapped up this morning, and we will be announcing those winners to the challenge. The top 3 traders will be receiving not funded trading challenges, but paid challenges by us, along with all-inclusive access to our mentorship program. We'll be announcing those winners on Saturday, the 15th. Is that the 15th? Yep, Saturday the 15th. And that will be our last live session for a little while, guys. So definitely stay tuned for that one. It's going to be a really big live session. We're going to go out with a bang here. We're going to be providing you guys with a little bit of value as we go throughout the majority of October and November. We'll come back with live sessions, maybe late November or December, kind of wrap up the year. But really want to focus on my VIP community, as we have been absolutely killing it these past few months. It's been personally my best year. 2022 in trading has been my best year to date. And that just comes through with continued learning, guys. You will find that even when you hit profitability and consistency, you're still going to, increase your learning and, obtain more knowledge, and you're just going to get better and better as the years go by. So definitely
learning never stops.
Keep going. Yep. In terms of our psych webinar, those of you who are in VIP, you guys, I touched base on this on last night's daily market breakdown video, but all of you guys are probably new to this. Those of you who are not in VIP, we will be holding our first ever live webinar for psychology. We will have to register for that webinar because it's going to be big. We're going to have a lot of people, and we only have a limited amount of seats available for that. So if psychology is something that interests you, and maybe that, you're going throughout your trading and you're not seeing consistency, or maybe you're a break-even trader, maybe even slightly profitable trader, but can't really get that edge, it may not have to do with your actual trading, just because, like I talk about in our psych series, the 80-20 rule, 80% of your trading is pretty much psychologically based. 20% is your strategy. Pretty much anyone can learn how to trade a strategy. I mean, you can learn my strategy over time, but what really separates the amateurs from the professionals is the tiny little details. And that comes down to being able to properly manage your emotions, which is very, very difficult to do. So I wanted to create that psych series for you all to kind of get a surface level overview of, sort of the introductory sort of concepts to psychology, and then host this live webinar on the 29th of October. It's a Saturday. It's 2 Saturdays from this Saturday. And we'll be going more in depth on psychological material, going over experiences, problems that you may be facing, sort of unraveling the little tiny mysteries of psychology that you don't even know that you're being subject to. So definitely stay tuned for that one. In order to register for that webinar, head over to our website, arielfxtrading.com. I'll just type it in the chat here. And then you will click on the Trading Psychology tab on the left-hand side, and then you will click, let me just go find it so it makes it easier. I'll actually just present my screen here so you guys can see it. There we go.
Sign up for webinar.
Perfect. So psychology webinar, I'll click on the left-hand side. You guys can watch part of the series that I have just to kind of get an overview of what we'll be talking about and the sort of concepts we'll be describing. But in order to register, you have to click join webinar now, and you have to fill out this quick type form. Just put your name, your last name, and your email just so we can book a spot for you. And we will email you the link to join with the passcode to get in 24 hours before. So we have a limited number of seats. So be sure that you get in as soon as possible if you are interested in that webinar. That will be hosted again on the 29th of October. The time is still to be determined. Haven't figured that out yet. And then 2 days later on Halloween, which is October 31st, we will be releasing our first ever Ariel Fx Advanced Psychology course. Those of you who are part of our all-inclusive mentorship program will definitely be receiving that course for free. But anyone who is not a part of our VIP but still wishes to participate in that course will hold a big promotional deal for you all, really touching base on sort of the surface level information within the psych series and webinar. Still really good information, very valuable. A lot of you have been giving me positive feedback, which I do enjoy seeing. But this is really preparing you for more of the in-depth, complex concepts that we'll be discussing within the course. So if that's something you're struggling with, psychology, then definitely stay tuned. You're not going to want to miss out on that. It's going to be awesome stuff. Anyways, what do we have here? Budapest, Cape Verde, South Africa, awesome. Mexico,
everywhere.
Good to have you guys on.
All over the world tuning in. Let's go.
Yes, sir. All right, well, we can go ahead and get started. I have a few pairs that I want to go over. And then Aiden, I think, has maybe a few he might want to discuss. Then I'll probably take some questions in regards to the pairs that you might want me to go over. I have setups on a lot of pairs, just not a lot of them are in the area of interest at the moment. So it may not be worth discussing, but if you guys want me to talk about some pairs, I can do that. But I will go over a few of my own, and then I'll hand it off to Aiden, see if he has anything else. So I'm going to share my screen here, and we'll go ahead and get started.
We got Tanzania in the house.
All right. Good to have you guys on. Thank you for the support. All right. So you guys can see and hear me. Aiden, we're all good to go?
Yeah, I got you.
Awesome. So as you guys know, or as you guys should know from Saturday's live session, by the way, if you guys didn't tune into that one, you guys missed out on a lot because we had about 4 trades hit on Monday that were phenomenal trades. So definitely stay tuned for those sessions, guys. If you're unable to make the live session, view the recording afterwards. They're immediately posted to the Trading Night YouTube channel. They are quite lengthy, almost 2 hours in length, but it's definitely worth your time. You really don't want to miss out on those every week. Anyways, Euro Swiss franc. I'm going to go over just a few of these in very brief detail, and then we can take some questions. We'll take some pairs that you guys want us to go over as well. I know it's blurry. I'm just zoomed out on the 1 hour time frame, but we can see the structure very clearly. We're in a bearish market. We should be looking for sells. In all honesty, guys, this should be really second nature to you all. If you guys are finding yourself taking counter trend trades because you think you might have a setup in the opposite direction, it's probably not worth your time trading it, because to be quite honest with you, all you need is one trade at a 1 to 5 or a 1 to 4 per month to be making 4 times as much as the annual hedge fund does, as the average hedge fund does around the world. The average hedge fund does about 10 to 15% a year, which in all reality is a phenomenal return if you have compound interest on your side over time. If you can have one trade at a 1 to 4, 1 to 5 per month, that is phenomenal. So we don't need to be over trading. We don't need to be over leveraging. We can be using sound risk management and finding the best of the best setups and using our rules and being patient and waiting for our setups to come to us and not forcing anything and still be way ahead of the game. So that's what really separates amateurs from professionals as well, is not only psychology, but the little tiny details when it comes down to the types of trades that are taken. So for instance, We're in a downtrend, lower low, lower high. I did not sell it at this level, but I found that this was a level of supply that we reacted from, right? We swept equal highs. We filled the imbalance that presented itself upon this huge bearish push. The momentum is to the downside, obviously. So within this counter trend, you can see the higher highs and higher lows. We had our last sweep of liquidity coming into that level of supply, filling that imbalance, and then falling, making that lower low. Okay, so we cleared structure. I wanted to pull back up into this level of supply. The reason this is supply, and I've said this, multiple times, but, you can see that reaction from it, and then the repricing or the failure to make a higher high in this bullish sequence, right? And then we made a lower low. Okay, so that was our flip from demand to supply. This was demand in here. Usually when you make a higher high, you react off demand, which is a higher low for another higher high. But in this case, we failed to do so, and we invalidated the demand and made a lower low. So that flips from demand to supply. So we're looking to take a trade from the open of that supply zone, which is also the imbalance fill at 98000, psychological level to the exact T. So we did take some trades in here. I remember a couple weeks ago, we did take a trade right there. We took a trade in here, I believe. Did have a little bit of drawdown on that one, but still maintained our stop loss very nicely and hit both of those take profits quite nicely at 0.95 down here. So good risk to rewards on those. But now we have the overall pullback, right? We've made that lower low on the higher time frame. The lower time frame, we are trending down, right? Just because we may push up all the way up into here doesn't mean this is a break of structure. Why is this not a break of structure? Because we're overall bearish. We need to be looking at the higher time frame trend now. Lower time frame, these are expansion, pullback moves, right? But on the higher time frame, this is the expansion, this is the pullback, this is the expansion, this is the pullback. So because we've broken this structure doesn't mean we're going to pull back and go long. It just means we're more pulling back higher time frame for another expansion downward, right? So we've come up into that level pretty much to the T, and we had a reaction from it. We did sell it there at 9.8, and it did hit our level pretty much to the pip. And I'm very glad we got that fill because, it was pretty much a wick entry. I'm surprised I got the fill on it. That's why it's always nice to have a low spread brokerage, especially when you're trading smart money, because usually the entries are very precise. But anyways, you can see the reaction. We have descending liquidity on a lower time frame. Okay, so higher high, higher low, descending liquidity. We had that final liquidity run, buy to sell, and we broke structure to the downside. We failed to generate a higher high. So now this becomes our supply level. We can see the imbalance that formed within this bearish candle. Just straight selling volume. We did not quite fill this wick yet. Okay, so now what we're doing is we are making lower lows, lower highs, lower time frame, so that later on what we can do is have our overall pullback, sweep buy side liquidity, everything in here come up into our overall zone of interest, that supply zone, either into 9,750, which is the start of that supply, or just a little bit deeper into our supply. There's like a 10-minute supply zone in and around 9,775. That's something we could definitely see. Some huge buy to sell would be on the table for me, in my opinion. Now, many people I saw were trading this, which wasn't a bad trade. We had liquidity run here, supply zone there, lower low. Okay, pull back, come up into this level, lower high, looking for a lower low. That's not a bad intraday setup. We have the concepts, those are there, but we have to understand, if we take this trade and we end up losing, we still need to be looking for further shorts, because this is the real level of supply. These are intraday, lower time frame trend levels of supply. So that could have been something that you played off of. But eventually, we're probably going to see our overall pullback taking buy-side liquidity in which we're forming here, and then coming up into our higher time frame level of supply at 9,750. So definitely mark off those levels. I've been talking about that level for probably about a week now, a little over a week maybe. We're just sort of trickling, but eventually, it probably should come up into that level, so we can't forget about it. AED Swiss franc, was hoping that we would get, a very similar trade here within this 2-hour sponsored candle. We can see that candle swept that high, swept liquidity, broke structure back to the downside. We made that lower low. So now we're just kind of waiting for that overall retracement back up into 6416. We can see that that huge buy to sell came up into supply. This supply was formed right after this huge buy side liquidity run. Huge buy side liquidity run, sweeping, descending liquidity here, continuing making that lower low. So we're just following structure at the end of the day, right? We're coming back up into our prior supply zones, okay? We retest supply right in here with this push, sweep, descending liquidity, continue a trend. Pull back, have that overall retracement, sweep, descending liquidity here, pull back into supply. Fall, make a lower low. Descending liquidity again here, pull back up into that level, mitigate supply, make a lower low. That's what we're expecting. It's the same stuff every single time, just on a slightly different setup and maybe a different pair. But it's the same sort of concept, and we need to be following that. However, how do we know that we haven't come into some sort of objective here in which we could actually see a break of structure to go long? That is something that's so important that many people overlook. They look at all these little tiny intraday trades, and they may get lucky with their entry, but they don't make the amount of money that they could be making from it. Why? Is because, that comes down to psychology within taking profit, moving stop to break even too quickly, not knowing where to take profit, not knowing where to put stop loss. It's all these little tiny things that can add up to really hurt your trading. So we have to find out where the objective is. And in all reality, there's really no objective besides this last point of demand in here. We can see when this 2020 crash, huge sell-off, huge reaction, right? This is where we started to break counter trend structure and make a higher high. So if we are to go long, we probably need to do it from at least 6.0, probably more like 5.980, back down into this demand. Why is this demand? Because we made a lower low, we pulled back, we failed to make a lower low again. Simply put, sell to buy, reprice, continue. And now we started the uptrend. So that is our demand level. Okay. So we want to be coming down into that level, and we can see that we haven't pushed down into it. We're approaching that. That is going to be the next target that the institutions take price into, right? So that is where we can be selling into. We can have confidence in that, understanding that we can take profit from this level, not necessarily buying from this level, but knowing that if we are to potentially go long, it really should possibly go long from this level here. So we have room to go. So now we just need to look at lower and higher time frame trend. Higher time frame trend is right here. Lower low, lower high, lower low, lower high, lower low, possibly a lower high like that for a lower low. Lower time frame trend would be something like this. Would be something like just a lower time frame supply zones met. Supply zone here met. Supply zone here met, imbalance fill. Supply zone here, we swept liquidity, right? We have equal highs here. If we get the overall retracement, that could be a good opportunity. 6.282, right? So lower time frame, if we break to go long, if we end up breaking this, if there is a potential for a buy opportunity, we can do that. If there's a potential for a buy opportunity, right? There may not be a buy opportunity. If there is, then we can take advantage of it, having the understanding that we're probably pulling back into our higher time frame supply level to then take it short into our higher time frame objective. So this is why we have a high win rate within our community, and we're so precise with these entries, is because we understand structure. You can implement these, the institutional concepts, understanding liquidity, supply and demand, time and price, imbalance zones, validation zones, reversal areas. You can understand that. But until you understand lower and higher time frame structure, it's going to be very hard to trade, in my opinion, because understanding structure, I know exactly where to take price next. I know exactly where, if price breaks counter trend here, where do I know that, where do I see price going next? Is it the negative 27 of this move? No, that's just a fib level. Is it we're making higher highs, higher lows now? No, because we have a higher time frame supply zone within this higher time frame trend. So having no understanding of lower and higher time frame structure or top-down analysis, it makes it very difficult to trade. So we understand higher time frame structure, lower time frame structure, higher time frame objectives, lower time frame objectives. It's going to be very helpful in our trading. So definitely looking for shorts here. If we break, we can potentially buy up into this level, 6416, if we have our concepts and our rules met. Obviously, just because we have this POI right here doesn't mean we can just instantly buy it up and do it. That's the worst decision you can make. Because how do I know that we're going to come into that level? I have no idea. We could easily just continue down. There's no setup for a buy right now. So many people will ask, well, why can't I just buy up into the POI? That's dumb, because there's no setup for it. I'm saying that if price comes to this level, if we actually come to this level, then I can sell it. But it may not come to that level. And in that case, no trade, we move on to our next pair, right? So it's just those tiny things. We don't need to We can't have that retail mindset. We need to start thinking like professionals. That's the only way we're actually going to make money in this market, realistically, over time. AED CAD, I'm just looking for pullbacks back up into supply. We're in a downtrend, higher time frame, low, high, low, high. We can see the counter trend, high, low, failed to make higher, high, lower, low. That turns supply. Right. Very simply put, very similar looking setup to NZD CAD. Up in here, we came up into supply, swept descending liquidity, huge buy to sell. This, supply levels in here, imbalance up in here. So either one of these two levels would be valid for me, 7.8 or 7.839. Just looking for a pullback for continued shorts. GU. So we got our entry here and here, I believe. I haven't checked my MT4 yet, so I don't really know if I got the fill on this one. From the looks of it, I don't think I did, just because the high of that candle is 10989 and my level was 11. So yeah, I probably didn't get the fill there. But anyways, we were in a little bit of profit here, about 100 and something pips, 107 pips. Ended up coming back up. We didn't break the structure here, which is why I didn't put stop to break even. So still holding this position in a slight amount of profit. We can see that within this counter trend move, or well, the lower time frame trend, this is our swing point, imbalance and supply right in there, descending liquidity. Take that liquidity very strongly, very strong push up, fill imbalance, make a move lower low compared to that swing point. So we're just continuing with the overall trend. Where can we be looking to get into the market? And on a lower time frame, there's really no lower time frame areas of interest within here. So I just kind of placed my entry off of 1.1060. It's that last buy to sell volume, also that psychological level, and also 1.11. So that round figure within the imbalance here as well. So just didn't get the fill there. Hopefully we can get the rollover to the downside. The reason why I sold it is because we still have room to go. We still have imbalance to fill in here, which we haven't come into yet, this area of demand. And I'm really hoping that we would get down into our lower time frame level of demand in here. This is a very important region of price. Demand is where we reacted from. Shoulder, head, shoulder. Enticing sellers below the neckline here. Sell to buy, reprice, continue. Why is that repricing? Because this is supply. In a downtrend, you would expect lower low, lower high, lower low. But we didn't make a lower low here. We stopped and made a higher high. So that supply zone that we reacted from was invalidated because we made the higher high. So now this acts as demand. But when we had the pullback, we never came down into it. So now this intermediate level of demand intrastructure can now be met as well, 1.09. So I'm expecting price to come lower. Hopefully we can get that push to the downside. GJ was another one that's sort of just pissing me off at the moment. As I got both of these entries and I was up like 140 pips on them. But at the end of the day, pips don't matter. It comes down to percentages. Those of you will find that out if you don't already know so in my next psychology video. So we have to be looking at percentages. And in this case, I was up about a 1 to 4 on this trade. I was, it's a 1 to 7.6 risk to reward. Got the wick entry yesterday, but ended up pulling all the way back up. My stops are at break even. So I'm not going to hold this to stop loss because that would be dumb because we already made the lower low. We swept liquidity just like we had on GU. Huge buy to sell, lower low, pull back, just didn't get a proper entry. Actually came back up into our lower time frame imbalance and supply up there. We could see a short, definitely. We could see a lower low. I would expect that just based upon market structure and the institutional liquidity that was formed yesterday. But we could make a higher high. And in that case, I still will be looking for shorts at 163.65 because we really need to get back down into discounted price, even if we are to go long. So if we are to go long, we really need to push deeper. We can see here, if I pull a fib from the low to the high that formed, we didn't even hit in equilibrium yet. We're still above the 50%. We're still in premium price. We don't want to be buying at premium price. We want to be selling at premium price. We want to be buying at discount. So we haven't even hit these levels yet. Didn't even take out sell side liquidity here, right? Didn't even take that out. Now, if we went like this, boom, boom, and started to push up, then it would be a little bit interesting because then sell side would have been taken and, it would have been a whole nother story. But we didn't. So I'm still looking for shorts. So definitely continue to look for shorts, in my opinion. We may take this high, and if that's the case, 163.65 is still on the table. Okay. GU, we talked about that. Hopefully we can get back down into this level. I'm just going to say in profit on the first one. I guess we just missed our second one. Didn't get the fill, unfortunately. Oh, well. GBP NCD, There's really nothing to talk about here. This is why the pound sort of pisses me off sometimes, because we have this zone of interest that we need to come into. Sell side liquidity needs to be run. We can see that we sort of broke structure. We pulled back into supply in here, and we broke counter trend. This is the counter trend. Failed to make a higher high, lower low. This turns into supply. That would have been an easy setup. Any other day of the week, this would have played out on any other trade. And it's played out so many times. But in this case, it's just not right now. We're a little bit of drawdown, and that's okay. You know, sometimes we lose trades. As long as we follow our rules and our trading plan, then we're completely fine. You know, at the time, we were currently in like 140 pips of profit, because you can see during almost the start of London session, we came up into that level and had a reaction for about 160 pips. But that was probably like a 1-to-1 or a 1-to-2 at most. So wasn't the risk reward I wanted. Overall take profit is down here at 925. Okay. Any other day, guys, you should be, even if you lose this trade, you can't be scared to take a trade very similar to this, because the concepts make sense, right? Pound at the current time is a little weak across the board. We have broken structure. We have broken counter trend structure. We have failed to generate a higher high in this counter trend sequence. We've reacted from the supply zone. This is an easy setup for a sell. Sometimes it works, sometimes it doesn't. Most of the time it will work out, but in some cases you lose. But you have to remain psychologically stable in order to say, okay, I lost this trade, but if I see a setup that presents something very similarly, I will still take it. Right now, it would be preferred if we actually made a lower low first. Then that would have been nice, but still the concepts were still there for me to take the trade. EUR USD, I'm just looking for pullbacks. You guys know this. Higher time frame objective is my level on the weekly, 93320. We can just see the structure, high, low. If we are to go long, we probably should go long from 93320. This is the last selling volume before we started the expansion. Imbalance in here as well. It's just straight buying volume. All right, this one failed to make a lower low, and we made a higher high. So 93320 is my objective point. Haven't come into that yet. We probably will. Dollar is still strong. Lower time frame trend, just for disrespecting structure, right? Supply came back into it, filled imbalance, stopped liquidity. Huge buy to sell. Failed to make a higher high, lower low, that turns supply. Boom, perfect reaction. Sweeping buy side liquidity here. Next, huge buy to sell. I'm surprised we didn't pull back and fill the gap, which is why I would have two levels on this. If we do come up and actually take out this high, I would then sell it from 1.0060, because this is still valid for shorts. This would just be a deeper pullback for this expansion, pullback, expansion move. Okay. But lower time frame, we did, high, low, failed to make a higher high, lower low. Turns into supply. We had that beautiful reaction right there. Then on a lower time frame, on the 1 hour, we can see the counter trend break. It's the same sort of concept, guys. High, low, high, low, high, low. Reaction off demand, failed to make the higher high, lower low. This turns into demand or supply now. Lower time frame, we also have supply in here in case we get a deeper pullback. But either here for shorts, or potentially, if it happens, 1006 for shorts into 93320. So risk rewards are good across the board. Why is this higher or lower time frame level valid? Well, it's valid because of time and price. So what happened during this time? Where's the Asian range here? Asian range is right here. At the current time, Asian range was right there. Asian high, Asian low. Come up, sweep the Asian high, entice the buyers, sell off, break structure. So now buy to sell, institutionally sponsored volume. Took the liquidity from Asian session, London session manipulation, New York session continuation. So we want to pull back overall into one of those two levels. We may not get that pullback just because it is a pretty steep pullback, in my opinion. And it would be probably like 90% retracement almost. We may not get that. If we do, then I'll look for shorts. But really, my main level is right in here. All right. EUR GBP, starting to see some reaction from our level from last night. Talked about this within VIP. We had that huge sell-off yesterday. I was buying within this trend here. We can just see higher highs, higher lows. I was buying off of, there was a level right in here. Demand, right? We got that level beautifully. Higher high was formed, higher low. We just failed to make a higher high. We actually came right back down, swept it. So stops to break even on that one. I didn't lose anything, but I didn't make anything either. So Unfortunate, but we move on. But what do we see? Ascending liquidity, 1 touch, 2 touch, 3 touch. Retail's buying at this trend line. Huge sell-off, sell to buy, sweep liquidity. Lower time frame. We had this lower time frame, little demand level, but also just a higher time frame selling volume before the higher high was formed. So one position here, you could have taken another one right there, got a wick entry. So in a little bit of profit on both, targeting our higher time frame supply zone. If we are to go short, we really need to go short from this supply here. Why? Because wedge, we squeezed, enticed sellers, took their stops, enticed buyers, took their stops, and we fell. Little supply zone, we came back up, mitigated our last buy to sell volume before the imbalance in the lower low. So if we are to go short, then we need to go short from this level, 0.89 psychological level. I mean, if we go long, fine, whatever. We're looking for longs anyways. But if we are to go short, we need to come higher anyways. So that's why I'm still looking for buys counter trend. And it's valid because of the concepts that we just went over. Euro NCD, looking for continuations. Now, where is objective? We need to understand where that is, because if we don't know where it is, how do we know that our buy level is actually going to hold and we actually will hit take profit? We don't know unless we know where objective lies, right? So within this current downtrend, lower low, lower high, as you can see, we're just having an overall retracement. Doesn't mean we're going to go short. I mean, we could, definitely we could, but if we are to go short, we still have to go long first, because right in here, this was our last supply zone. You guys can see that. That's pretty clear, right? We came up into that supply, filled the imbalance in here. Straight selling volume. We filled that. Now this becomes, I think on the weekly time frame, it's very nice. This is our last supply zone in there. Let me just check out the weekly to show you. Weekly time frame. You can see that doji candle, right? Right there. Dragonfly doji. We need to come back up into that level. 7, 7, 7, 8, potentially higher into, just deeper into this level. Long story short, we need to go long. So continuing with lower time frame structure, because I mean, we're bullish, right? That's just obvious. Please don't tell me that you sold it here. This is not a break of structure when we went like that. That was not a good sell. Just because we sweep liquidity barely or make a lower low barely doesn't mean we're actually going to shift structure and go short. Haven't even come up into objective, first and foremost. But second of all, when you're in a bullish market like this, oftentimes you will see the lows run. If it's going to go short, it's going to sustain below this low, actually sustain below it. This was just a quick sell and then an immediate buy back up. So we know that's a liquidity run. So liquidity run here, coming into demand, 1 hour demand, perfect. And then the higher high was formed. Descending or ascending liquidity is forming, sort of kind of a head and shoulders, not the best head and shoulders ever, but I don't know, people could be trading it. Either they're buying off of this trend line or they're selling below the trend line with some sort of closure or break and retest, right? So we could see something like this. That's definitely something we can see. Why? Because this was once supply, right? Lower low, pull back, lower low, pull back. We should have made a lower low. Obviously we didn't because we came into demand, but we busted through that supply. Now it turns to demand now. And we have imbalance between that wick and this wick. So it lines up very nicely. Okay. And that's in discounted price, higher high, higher low for a higher high. So many people would trade this as, okay, break of the neckline. Let me sell it when it closes. Cool. It closes right here. This is where I buy it, right? Observe the masses, do the opposite. We observe where retail's getting in, the masses, and then we do the opposite. We buy it right in here. They sell it, we buy it. Now, with a break and retest, because of the neckline, usually you break and retest the neckline, price starts to short off, then it pushes up. Now, what does that form for us? It forms the sell to buy, reprice, continue, demand, buy it again. See how we can utilize these retail concepts and turn them institutionally? We know where the liquidity is. It's just obvious. And we just identify where retail is getting in just through simple clues. And then we just do the opposite of them. Because at the end of the day, retail will lose. Institutions will win. And if we trade on the right side of the market, we're going to be profitable. Euro AUD, there's no setup on this currently. But, I talked about this on Saturday's live session. Huge sell to buy, just continuing with the overall market direction. I mean, we're very much bullish. Higher time frame objective is going to be 1.6. We're just mooning at this point. So it's just simple higher high, higher low into demand type of trade. Really straightforward. Got the entry. And still holding in good profit. I think we're up about, we entered at 5.2, so right there. We're up about 320 pips, so not bad. Really, in all reality, we're up. Not the best risk to reward right now, just because we had a deeper stop loss. 135 pips, I believe it was, maybe 130. I forget what I have in my MT4, but up about a 1 to 2.35. Still not bad, but still holding the 1.6 overall. AUD JPY. So we've come down finally into our overall level, right? We're still maintaining higher highs and higher lows. High, low, high, low, high, low. Okay. So with structure, what should we naturally expect? A higher high back up into 100, right? Why 100? Now, it's a psychological level, yes, but we have to look left, right? It's always important to look left. And looking left, this is really our last point of return. We came up into supply here. There's supply right there. I'll just scale into it, right? It's that counter trend, high, low, high, low, high, low, failed to make a higher high, lower low. That turns into supply. And that's exactly where we came into right here, right? So now our last point of return, I mean, heck, we could even bust through that and make a higher high. We could do that because on the weekly time frame, we respected demand. This swept this low or these two lows, and we respected demand. We could easily make a higher high, but I'm trying to buy lower time frame anyways. So if I'm going to be buying, I have conviction because even if it goes long all the way up here, fine, I'm still buying. But if it goes short, it still needs to come up into here, in my opinion. So either way, longs are still on the table. And then I would wait for price to enter into this zone and then look for opportunities to short. I wouldn't short immediately. I would wait for lower time frame confirmations, look for distribution on like the 1 hour, 2 hour, 3 hour, 4 hour, look for lower time frame breaks, pullbacks into, supply zones, lower time frame, right? So the supply level is right here. And it's pretty much straightforward. Remember, we came up into supply right there. So we had that mitigation, which is why we stopped, pulled back, failed to make a higher high, lower low. Strong impulsive move, imbalance in here, right? Straight selling volume. So we want to fill that imbalance and come back up and retest that supply zone. So 100 lines up perfectly with that supply, psychological level for AUD JPY. So looking at taking this long, 4 hour time frame, we had to come all the way down into this level. It was a big retracement, right? Deep into discount, which is good. We want to just take out all sell side liquidity in here. Okay. So where is our area of interest? Well, as discussed, it's between this wick and this wick here. Let me just zoom into it. Because when we swept liquidity initially, lows, sell to buy, and we went long, coming into higher time frame demand, as I've been talking about for months and months now. So imbalance is between this wick there and this wick here. Why? Because there's selling that was involved in this wick. There's selling that was involved in this wick, but there's just straight buying involved there. There's no selling. Selling was not offered. Price did not fill its inefficiency, if you will. So imbalance rests between this wick and this wick. So I just picked 91.5 for that psych level. And I simply just placed a buy limit because it's valid. Now, I didn't place my full risk because, well, I want to confirm it as well. So if we get something like this, we're in a little bit of profit right now, but lower time frame, what I'm simply waiting for is just some sort of institutional based concept, right? If we, sweep these equal lows, just come back down, go like sell to buy, maybe make a higher high, then boom, we sweep all the liquidity here, huge sell to buy, make a higher high. Cool. Demand zone in here. We come deeper into this demand zone, sweep equal lows, sell to buy, make a higher high, not make a lower low. I can easily pull back down into that sponsorship move and then take a long from there for more confirmation. So I can add the rest of my position. But I've gotten into this just in case we just trickle and go. At least I'm still in the trade. But at the same time, if it just bulldozes its way down, which I don't expect, but it could, obviously there's always a chance for everything, then I'm only losing 0.5%. So I look for confirmations lower time frame. See, if I'm trading on the 4 hour time frame, like I'm looking at my setup on the 4 hour, I would then probably scale into the 1 hour or the 15 minute or 30 minute to look for my re-entries. If I'm trading on the 15-minute time frame, for instance, let's just say I'm just going to make this up, guys. Do not take this as an actual setup. Let's just say I'm buying it right here, just making this up. And I see prices come into it and we're reacting from it. If I'm trading off the 15-minute, then I'll scale into the 5-minute and below to look for counter trend breaks of structure to be taking it long, right? That's what I would do. So when people ask me what time frame do you trade, I trade every time frame. It just matters what what time frame I'm currently looking at in terms of the higher and lower time frame trends and what looks the prettiest. Obviously, if I'm on the higher time frames, I'm going to scale into the lower time frames for confirmation. If I'm on the lower time frames already, I'm going to scale in even further for more confirmation. So hopefully that helps you in that regard. In all reality, that's what I have. I'm going to have Aiden go through whatever he has, and then I can take some questions, go over a few pairs that you might have, and then we will be done for the day.
Awesome. Chat's pretty quiet. I guess they were mesmerized by your analysis, Nate.
That was a good thing.
Oh, what's everyone else looking at? What are y'all in? I know it's been kind of a slow week this week, especially with the holiday on Monday, which always kind of throws things off in terms of rhythm for a little while. But yeah, so far nothing crazy in terms of pertinent setups. I think the only couple that I have that Nate didn't touch upon were some of the yen pairs. So I'll go ahead and share. Now, I think I talked about CAD J last week, if I'm not mistaken. Correct, Nate?
I believe so.
But you know, those of you who weren't on last week's session, it's really the same setup that I talked about last week. It just hasn't played out yet, right? We've just had to remain patient, and that's part of this game, right? Sometimes you will get a retracement immediately into your point of interest, and other times you'll have to wait a long period of time in order for it to play out, right? And patience really does pay. But this is one that I'm looking at first and foremost. I like these lows, right? This is nice engineered sell side liquidity. You have this massive sell off, right? And this initial low, price trades down into it, double bottom, triple bottom, engineering liquidity in the form of stop losses and sell stops, right, beneath these lows. And so for me, when price pushes higher without having run these lows out, that gives me conviction that, okay, we can sell, right, premium retracements, right? And so we can sell retracements into premium. Okay, I look into premium. What do I see? Well, I really do like this area of price. Again, this is the same level as last week, but it's the model that I like, right? We like to see the highs and the lows, right? Run the low first, run the high, and then break lower, create that new lower low, right? And if you just think about this from a law of effort standpoint, you can see you have that institutional manipulation, the massive sell-off, right? And so that's just literally within a few hours. And then look at how long it takes to even get back up here, right? Very minimal momentum, right? And effort in terms of the buy side, right? So that also is a nice confluence for this as a corrective, right? Retracement into premium, right? Preferably up higher into 107.6, 107.8, get a nice extreme premium. And then we can sell into liquidity, right? Obviously, this being first targets and final targets, we have this nice area of manipulation here, right? Where we have the head and shoulders, the neckline, retail traders looking to sell upon the break of the neckline, the retest of the neckline, right? And then they get destroyed. Simply a liquidity run, sell to buy, make a new higher high expansionary move. Right, we just never did really trade back down into this area where we have significant imbalance and efficiency, right? And so I think this will provide us a nice opportunity to get one more expansionary move to the downside with premium down into our objective 103.65. All right, so that's the setup on CAD yen, and then the other one would be Swiss franc Japanese yen, and it's very similar. It's the same one as well we talked about. Right, this is just simply not a low in the market. Right, this will need to be run out. We have very clean sell side liquidity resting beneath these lows here. Just clean it up quickly. Right, nice sell side liquidity here. So that ultimately could be the overall target, right? And I'm looking at this as a nice area of manipulation, buy to sell, create a new low, law of effort, corrective in nature, looking for that premium, sell side liquidity, right? Very simple, right? Very straightforward. Really looking at, okay, where are they magnetizing price towards in terms of liquidity? Where are the stop losses? Where are the buy stops and sell stops, right? That the majority of people are placing, right? And then it's just simply a matter of following market structure, understanding the overall narrative and objective of where they're really seeking out the liquidity. All right, so again, this has been engineered, right? And we're pushing higher now, looking for the premium, right? To then mitigate the up close, right? And this is going to be the kind of primary focal point, the opening, right? Coming in and around 148.9. And then obviously we can dig higher into, right, this last up close candle. All right, but this is the overall point of interest. I would certainly mark these levels off on these two pairs and wait for that time and price, lower time frame reaction, break of structure, targeting our pools of liquidity. All right, so that's pretty much all I have. Nate, you didn't talk about Kiwi, right? NCD USD.
I do not believe so.
All right. I guess I'll just very quickly, and then we can take some questions. I know we're running out of time. We're in a downtrend, significant downtrend. Obviously, Nate talked about the dollar pairs, and how we do still see some significant downside on these pairs as the Fed continues to raise rates at 75 basis points every time they meet, right? That's obviously going to strengthen the dollar relative to foreign currency. It doesn't mean the dollar itself is strong, right? It just means everything else is even weaker. But anyway, EUR USD, obviously we have some potential or some serious potential on this one, right, to get back down into this area of demand, right? I really don't see anything stopping price until we get down into at least 9,350, right? So that should mean more dollar strength overall in the higher time frame, right? So if we hop back over to NU, just simple lower time frame continuation with the overall trend, 4-hour time frame, and again, this is the same model that I like to preach, right here on NU, right? You have that kind of initial range high and low, right? And obviously we're in a downtrend, right? So what we want to see is then that first initial run on the lows where we had lower time frame equal lows, run on the lows, run on the highs, okay? Ran this short-term high, still respected this area of supply, and then we break lower. All right, and so now naturally, okay, we should be in alignment, lower time frame with higher time frame in terms of overall momentum and direction, right? Especially after this model has printed, right? So simply looking for a retracement into premium for continuation, guys. It's that simple. You don't have to overcomplicate smart money concepts like so many other people do. We really try to teach a simplified approach, and really, mastering very simple liquidity principles and market structure, understanding premium and discount, and other confluences that really just accelerate your growth, right? That you don't need the extra bells and whistles that ultimately do nothing but confuse you, right? And destroy your psychology. Right? It should not be difficult. It should be very easy and routine. All right. So again, looking for a retracement into premium. I like this level here, right? Because we have that initial sell to buy, that demand, price traded into it. You can see that we had that slight reaction off demand, and then we flipped, right? We broke through. So this is going to be the initial point, kind of 5,700 round figure, right? And then obviously, there is a possibility that we do trade deeper into the extreme of this up close. All right. So simply looking for retracements for continuations lower. Obviously, you can, in terms of targets, simply kind of target that -27 extension. All right, so that brings us in around 5,450 as next objective. All right, so that pretty much wraps it up for what I had in addition to Nate's.
Yep, I can go over some other pairs that you guys want. Yeah, guys, definitely stay tuned for episode 4 of the Psych series that will be posted to my YouTube channel on Thursday, so tomorrow. That will be the last one before I do a final recap of everything. I'll do like a tying it all together, giving you that holistic understanding type of view. And then we'll host our first ever live session or live webinar for psychology. And that will be on the 29th of October. So if you are interested, go to our website and book your free seat by registering. It's pretty self-explanatory. You can just click on the psychology webinar tab on the left-hand corner and it'll come right up. You just fill out your name and email, and then you'll be emailed your link and your password to join upon that day, because there's only going to be a limited number of spots. But guys, if you're interested in learning how we do trade, this very simplified version, but very precise version, feel free to head over to our website, arielfxtrading.com, book a free call with us. And, the great thing about it is, we provide our everyday analysis and setups. So, we don't do signals per se, but we give you areas of interest to look out for. So wink, wink, it's pretty much almost signals. Just can't call it that. But it really helps you to sort of earn as you learn. But the most important thing is to learn how we do trade, and you can become self-sufficient over time. But if you are interested in receiving the analysis to, potentially make some money, then, we do offer that as well. We're constantly sending out pieces of analysis and setups with areas of interest. I mean, everything we've talked about here, there's even more that I don't even mention on these live sessions that we give to our VIP community. So that's something you're interested in, hop over to our website, book a free call with us. We'd love to talk to you. Obviously, prices will be increasing with the release of our course, but if you get in now, you will obviously have that discount, which we're actually running, and then you'll be receiving that course for free later on. I'm actually probably going to come out with some sort of smart money supply and demand type of crash course for the course members or for the VIP community within the next few months, maybe late this year, early next year. I think that will be very valuable to you all, in addition to all the other educational material we do have. But, if that's something you're interested in, yeah, definitely check us out. We'd be happy to speak with you. But what other pairs you guys have? I know we have GBP CAD, AUD NCD, EUR CAD, I believe. Don't worry, I haven't forgot about you guys.
Jen and Jared, you're back. Remember you.
Mm-hmm.
Loyal. So many things to take in consideration.
Definitely.
Yeah, but with experience, right, with the right mentorship, right, and dedication to gaining that experience, these things become second nature, right? It's very step-by-step routine, and your mind just goes through the process, right, where you don't have to sit there and really think about each component, for a significant period of time. It kind of just flows together with that time and that experience. So, I can understand, for maybe someone this is kind of new to them, that it can be overwhelming, but it really is a simplified approach. But it's really all you need is a step-by-step simplified approach that ultimately you'll be able to know like the back of your hand.
Yeah, it just takes time to learn, just like anything.
Exactly.
But once you get it, you can. I'm retired. This is what I do for a living. This is what he does for a living too. So that's what Forex can provide if you just take the necessary steps that you need, investing in your education, but focus and never give up within this skill set, because it does pay huge rewards. The people who quit are the people who, look at something like a course or take anything and then immediately fail with it and then quit because it's not instantly profitable for them, right? That's not how anything in life works. Right? You can't have that instant gratification every time. If life was that easy, then everyone would be happy. It's just not how it works.
Exactly.
You put in the time, you do the little things correct, even just the little things. It's just going to do wonders for you. It's going to really open your eyes into the potential that you do have. Everyone has the potential to do this full time. You do have the potential.
Yeah.
I thought I didn't when I first started. I'm not the smartest person in the world by any means, but yet all I had was the drive and the focus, and I did the little things right, and I practiced the right habits through the mentor that I had, and I'm here where I am today. So,
bro, people are fiending for the CAD pairs.
Don't worry, guys. I'll still talk about CAD. Just be patient, please. I'll still go over it. Let's see. How much is the class? Are you talking about the webinar?
No, he's talking about our mentorship.
Oh, well, that's something we have to talk about on our call. It's really not that expensive, guys. We try to make it very, very inexpensive for you all. We kind of have to charge just because it's principal, but at the end of the day, I mean, I got on a 2-hour long one-on-one with a client yesterday. I just love doing it. I have a passion for it. I love teaching, and even if you guys don't have the necessary financial means, we can work something out in terms of some sort of payment plan or something. I don't want financial constraints to be the reason you guys can't learn. All right. That's the last thing that I want. So I'm really able to work with you all as long as you're able to work with me in some regard. And if you guys have the mindset and have the drive, we can be great partners here in doing this. So, but just definitely book a call. I'd be happy to, hear about your story and see how we can best help you. Let's see. How much? Yeah, let's see. Smart money concept. Yeah, it's awesome. Smart money is awesome. UJ, where is it going? It's unstoppable right now. Yeah, UJ longs definitely all day long.
Yeah, we already
don't just buy it though. If you're not in it, don't just buy it. We need to find a setup first. We need to be patient and wait for a setup to come to us, because it is in premium price right now. So I would just wait for an institutional type of setup to form, and then definitely the bias is still long. AJ already went over earlier. So this hasn't been a long live session. You can kind of just go back through the recording after it's been posted and just skim through it and find it. All right. So you guys are waiting on GCAD, ECAD, and what was the other one? AED NCD. Okay, cool. I'll do those now. Sweet. Okay. So AED NCD, to be quite honest, I really don't see much on it. We are higher time frame in a bullish uptrend. We have just barely missed 1.15. I was really hoping we get up into that level. Daily time frame, we have swept a lot of liquidity. We just took out this prior high and all of these highs, all this buy side liquidity we have run. So really, we're still bullish. We have a lot of imbalance to fill, just straight selling volume. But I wouldn't be surprised if we saw some sort of overall pullback. However, I still have to trust the structure at this current time. I still need to be trading long until it says otherwise, right? So really my two levels of interest are going to be this area of demand here resting at 1.1155, and then this area of demand here resting at 1.107450. Okay. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So it should react off this level. We had our last on the 15-minute, or actually the 1 hour time frame. We swept liquidity, sell to buy, reprice, continue to have imbalance in here. So that's definitely an area of interest. But if we come lower, I still would be interested in buying it down here. The reason for this is that, we've just been following areas of demand in here. Demand, reaction, sweep liquidity. Demand, reaction, sweep liquidity here, and down with this low. Then what do we have? Well, we have a huge sell to buy, chop, 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 kind of reprice ourselves, expansion, and we continue. So that acts as demand now. So those two levels on AUD NCD would be valid for me. I'll just zoom out so you can see it one more time. Those two levels, I am looking for buys. Counter trend, if we get the pullback now, like if we don't come into this first and we get pullbacks, then here is where I'll be looking to sell it. Right there. 4-hour 50 EMA, continuation. I mean, heck, even if it goes like this, would it be a bad idea to sell it there as well? Yes and no. I mean, usually no, because this is objective. But if you want to hedge yourself, it's not always a bad thing. I mean, as long as you have proper risk to rewards and understand where price could go. Like for instance, if you sell it here after prices come into here, obviously the risk to reward is going to be huge because we're looking to target higher time frame highs, right? A higher high. So that's going to be the risk to reward. But if you sell it here as well, if you lose, then fine. You're still going to make good risk to reward on this trade, and it would take care of your losses and some. But if you sell it here, then it comes down, you move stop to break even, comes shorter down into here. Well, now you have either broken even if you didn't play stop to break even and you lost the trade. Fine, you lose the trade, but then you're winning a lot more because your stop would go above this high or this high, whichever you choose, and your take profit would be down here, and that risk to reward would still take care of your losses and some. So hedging is not always a bad thing, and that's why I say, sometimes when people ask me, why are you looking to, I'm just going to make this up, sell NZD USD but buy Euro USD? Obviously, they're correlated, so why wouldn't you want to sell both of them or buy both of them? Well, if I look at the setup at hand. If NZD USD is showing me shorts and Euro USD is showing me buys, then I'm going to take those setups, because at the same time, it could act as a hedge against one another. Because what if NU loses? Well, then I have EU that's most likely going to be a winner. And then that risk to reward, because I have high risk to rewards in my trades, that's just how I set up my trading plan, is going to take care of that loss and some. Obviously, you don't want to do this. Let's say objective is right here, right? So we enter short. Let's just say that. I'm just going to make this up, guys, okay? Let's just say this doesn't exist. Don't even look at this. Let's say the objective is here and we're looking to go long from that level. And you want to sell it and you want to place stop right there, okay? This would be a 1 to 2. Let's call it a 1 to 2. Is that a good risk to reward? And in your mind, maybe you say, no, maybe I want a 1 to 5. That does not mean we need to be just placing our take profits at a 1 to 5 for the sake of wanting a 1 to 5. Where is price most likely to come into and reverse? If it's right here, then your risk to reward's a 1 to 2. And you either have to take the trade or not take the trade, right? We can't just adjust our take profit to fit our risk to reward, desires. It's not how trading works. So you have to do things appropriately. But as long as the numbers match up and align with our trading plan, meaning risk to reward and percentages, then we're going to be fine. So either those 2 levels or 3 levels really wouldn't be a bad idea to short that or buy that there. All right, let's see. GBP CAD. GCAD, it's pound is just being really weird. I would expect a lower low just because we are in this sort of counter trend pullback. We came up into supply yesterday here. This is our last buying volume there. We could short off, make another lower low, just do that. So shorts are valid. If you find a setup that meets your rules, shorts are valid, in my opinion, up down until 1.49. Because if we just zoom out, we can see the huge run on liquidity, huge sell, but huge reaction, reprice, continue, right? Normally, we would have done this. If we made a lower low, lower high, we would have made a lower low. But we stopped. Immediate reaction, very strong reaction. We literally retraced about 75% of this huge push within a matter of the same time it took to push down, which means, in my opinion, it's just a huge liquidity run. So created head and shoulders here. Zoom into it. Head and shoulders there, lower time frame. Entice buyers, take their stops. Entice sellers, take their stops. So huge sell to buy, demand zone. Also the repricing, sell to buy, reprice, continue. Higher high was formed overall, right? So pull back into 1.49 would be good for longs. Only thing is I wouldn't even know where to place stops. Well, I do. It would be here, but that wouldn't be the best risk to reward unless you actually had an area in which you could potentially buy it up into. So let's just say your area is right there. I'm going to make this up. The risk to reward's a 1 to 2.5. Probably not the best trade to take. And in that case, you probably wouldn't take it. But if you had conviction that price could come up into here, let's say there was actually a valid region of price to push up into here, which in my opinion at this current time, there's really not, because, lower low, lower high, lower low, lower high, reacting off supply now. So even if you do get the reaction, we may not even see a big push to the upside. It's just a little tricky at the moment. Pound's being a little weird. But if you did have conviction that it would come up into here, that's a 1 to 4.5. That's probably a good trade to take. Good enough risk to reward. But it all comes down to your RRs, right? Because at the end of the day, that's what makes money. It's not pips, it is percentages. So that's GCAD. I think someone had a question about EUR CAD. Yeah, EUR CAD I talked about on the Saturday's live session. So guys, be sure you're tuning into those live sessions. I don't mind repeating myself on occasion, but at some point I have to just say, you guys need to watch those live sessions, and then, but whatever, I'll still go over it. We can see currently we're in a counter trend uptrend, right? Making higher highs, higher lows. So the counter trend is bullish, but where's the higher time frame trend? Well, we're bearish, right? We're making lower lows, lower highs. Where's the higher time frame objective? Well, we haven't reached it yet. It's right in here, because we go down to a lower time frame and look at it. Equal highs, buy up into supply. This is where we failed to make a higher high. Where's the demand? Demand is right there, reaction from it. Demand is right here, reaction from it, but we failed to make a higher high and make a lower low. So that turns into supply. Okay, so that's exactly why we had the reaction where we did. Sweeping buy side liquidity, Counter trend here, high, low, high, low, high, low, high, low. Reaction off demand right there. Failed to make a higher high because we reacted there, lower low. Cool. Now that turns into supply as well. Exactly why we had the reaction there, guys. It's simple. It's really simplified. We just need to not overcomplicate it in our own minds. So that turns supply, boom. You could have, it would have taken a little while for it to actually play out, but it did. A little bit of choppiness. So that becomes our supply zone again. I'm going to go back over here. We can see because, well, it's imbalance between that wick and that wick. So selling volume in here needs to be filled. Also, it's really the last buying volume, really just the consolidation before the drop. So that turns into supply. We haven't reached that yet. Really wanting 1.36. That's my overall target. So continued buys up into that level. Where's the most recent swing point? Where's the range currently on the lower time frame? So we know we're going to be looking to buy, but where's the current range? Well, this is the low that generated this higher high. So we could see an overall pullback into demand in here for longs, demand in here for longs. And if we come lower, because we have ascending liquidity, we have a psychological level 1.31 and 1.3090. It's also the 50% of this huge sell to buy move. So anywhere in here could be good for longs. Or if we come all the way back down, we still maintain structure, right? But on the 5-minute time frame, we have perfect imbalance there. We could go long from 1.305 up to 1.36. So all 4 of those levels are valid for me. Would be good risk rewards on all of them, in my opinion. Obviously, stops from here would go below here. Stops from here would go below here. And then stops from this level and this level would go below these lows. And I'll just show you on the 5-minute what that looks like for that imbalance that you can see within that huge sell to buy. Everything else in here is efficient. All imbalances are taken care of, right? Everything's efficient until we get here, right? Wick, imbalance. 1.307, 1.306, 1.305. Either one there. So I know that was pretty quick, but hopefully you understand kind of what I'm talking about there. Hopefully that helps you guys. That's what I'm looking for. Obviously, if price comes up into that level, then no longer will I be looking to buy because objective had been met. And then I would be looking for shorts. You could sell it here. You can just place a sell limit if you want to. On lower risk, maybe half risk. And then on a lower time frame, we can be looking for our confirmations. Just confirmation, distribution, boom, 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 like that. I don't know. Something like that. Whatever we can find. But that's something I would look for on EUR CAD. All righty.
Reese, appreciate it. Glad you're learning a lot. That means a lot to us. That's the whole point of these.
Yeah, that client call I had last night with a really great guy. He said that he's up 15% on his $100,000 account, 15 grand profit. See, that makes us like that. That's what motivates us guys, is seeing you guys succeed. Because of our teaching, he's able to make money, and that's awesome.
Absolutely.
Thanks, Nathan. UJ is going great right now. I'm surprised you're not going to look at it. I mean, yeah, we're still in from, what was it, 108.4? I believe that's what the long is. I'm just waiting for a retracement to get back in long.
And I made if you guys don't follow our Instagram, Nate, if you want to drop the IG in the chat, I made a post about UJ last night or on Monday night, right? And this is the opportunity that we took a few weeks ago. And obviously this was handed out, right? I gave this out to you guys, I believe on a live session, but also on Smart Money Sundays, which I post every Sunday to our YouTube channel, right from this level, sweeping out sell side liquidity simultaneously.
That's right, 140.8. That's right.
This was the level that was handed out, right? Simply targeting this old high. Obviously still be in it. I mean, it's extremely bullish, up 1 to 10.5. But what I wanted to kind of emphasize in my post last night was the fact that, think about the volatility injection here, right? After an enduring uptrend, right? This thing has been pushing up and pushing up and pushing up, right? What does every retail trader, well, maybe not every, but most retail traders, what do they think is happening when they see this? In their minds, this triggers psychologically, oh, we're shifting trend, right? We must be shifting trend. This must be indicative of a reversal, right? But we as smart money traders understand that in enduring uptrends like we've been seeing on USD JPY, right, it's going to take a lot to actually shift trend and structure, not some 2-hour sell-off, right? So for us as smart money traders, we look at this immediately as an excuse to get long again, as an excuse for discounted longing opportunities, right? And so, you can't be tricked out by things like this, right? I understand like it's high volume, high volatility, right? But really, it's just an excuse to shake out the market, pick up bids at discounted prices, and for price to continue in the overall direction of trend, right? And you can see, obviously, the stop loss placement, right, was below here, right? So very, very tight stop loss, 510 pip take profit for me. This old high, this was obviously met last night. In a
You can see
beautiful
we
trade.
formed that higher high, guys, right? So what we're looking for now is a higher low. So where could we be pulling back into to take that long again?
Exactly.
From that repricing event around 142.50.
Exactly. So potentially run out this short-term low, right? Initially, I kind of wanted price to trade into. There's a lower time frame candle within here, right? We never got that. We've now made a new higher high on the higher time frame, so that could open up for another retracement down into the 142.50 area that Nate just mentioned. All right, but just wanted to highlight this as the opportunity on UJ. Obviously, we're at the highest of the highs, so we shouldn't be buying right now, right? We don't buy in premium, we buy in discount. All right. So hopefully you took some value from that one.
Yep. Very good.
Don't let your mind get tricked.
Mm-hmm. It's all psychology, guys. It really is. At the end of the day, you may not realize it, but it is psychology. So that's something that, we've been really planning out for the past few months now, is how to best present psychology in a way that everyone can understand but actively apply to their everyday trading. And it's very difficult to get inside your mind to help you understand some certain things, but we're going to try our best within that course. I think it's going to be awesome. But then the live webinar on the 29th is going to be really cool too. Let's see, NZD USD is still short. Yes. Where do I go to book a call? Our website, arielfxtrading.com. Yeah, it is a Zoom call. That's correct. Let's see. When do you consider a zone no longer valid and that price will not come back to mitigate, and we should choose the more immediate zones?
I think you just alluded to that, right? If it comes into the higher time frame objective, right, then we're not looking to then take it off of that zone anymore.
Yeah. So I'll do a little bit of an example so you can maybe get a better idea. So what we're looking for, what am I doing? There we go. So obviously within this higher time frame downtrend, right? In all reality, this is a swing point. This is just a huge expansion. This is a big pullback. So it's a pullback. This is a big expansion. This is a pullback. So what should we expect next? An expansion from this level. Lower low, lower high, lower low, lower high. So we have to understand higher and lower time frame structure. This is why so many traders lose, is because they don't know the difference between a continuation and a reversal, when stuff is invalid versus valid, and when we should be looking to get out of our sells or buys in the opposite direction of trend and continue with the overall direction. Those 3 or 4 things that I just went over is crucial to your profitability. And it's really just these tiny things. And it's a very simplified way of looking at it in which we teach. But it's so crucial to your profitability because, many people would think about this as, okay, look, excuse me, higher high, higher low. Cool. Maybe they get in long here, higher high. Great. We react off this level. Maybe they try to buy it again. Oh, it goes like that. And they don't know why they lost. Well, it's because they didn't zoom out. You got to zoom out and look at where is price going on each time frame. Now, you don't have to look at it like, oh, where's price going on the 4 hour? Where's price going on the 3 hour, 2 hour? It's really just, okay, where's the current trend? It happens to be here on the 4 hour. Okay, it's bullish. Where's the overall trend? You just got to zoom out. You don't even have to go to the daily. You can just zoom out and just see that we're overall bearish, right? So zones are no longer, these will no longer be valid if we come up into this level first, right? And just like when USD JPY, or excuse me, before I get into UJ, where the heck was I? Oh, that's right, UCAD. Sorry. It would no longer be valid because this is the overall objective point. Because at the overall objective point, just like any structure, I mean, it could be like this: high, low, high, low, high, low, right? Or high, low, high, low, high, right? So this is just one expansion in a low, high, low sequence. So when we hit that overall objective, we should be looking for shorts. Buys shouldn't be off the table, because if it comes up into that region, we need to be looking for overall lower lows, right? We're not going to look for another higher high because the objective has been met. And then same goes for UJ, right? So for instance, lower time frame, we swept liquidity in here. Clear equal lows, right time of day. Sell to buy, we were looking for a lower time frame. There's a lower time frame area of interest down in here that didn't pull back enough. So we were looking for that level. But after that, we made our move and we've made a higher high. So price is not likely to come back down to this level and react from it. Because since we made a higher high, we need to look at the bigger picture and be like, okay, well, if we wait for a pullback, where is that going to pull back into? So just because, you had liquidity run, structure's been broken, higher high, higher low, this is just lower time frame trend you wanted price to pull back down into in here, which we didn't get the fill. But now we have to look at the higher time frame. Now it's higher high, higher low. So when we pull back, we're not going to react off this most likely. We're going to have an overall pullback to satisfy this trend, right? So sometimes it can be confusing, but it just comes down to practice. I wish I had other examples I could show you. I can't think of any off the top of my head, but that is a really good question. That is something that we divulge deep into in the course as well, in our Smart Money course, because it's stuff like that you need to understand. And, we don't hold anything back within our courses. We tell you everything that you need to know, pretty much everything that I've been taught, I teach, because there's no point of hiding anything. So yeah, hopefully that helps. If you have any questions, just send me a message personally. I'd be happy to work with you further on that. Also, for the pairs that you do not place limits, what is your confirmation method when the price is in the zone? So that's just a little bit tricky because it's different every time. It's not going to be the exact same thing. Now, there are steps in which we take you through to teach you, kind of what to look for, but every setup is going to be different, right? You're not going to get the perfect. Let me show you. You're not going to get the perfect distribution that we had here in the lower time frame on NZD CAD. Right, this is a beautiful distribution and confirmation when we broke structure. Right, we've come up into our zone of interest, a zone that swept liquidity and came up into supply. Beautiful sponsorship move. That would be perfect confirmation. Wait for the structure to break. Boom, 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 boom. Oh, we broke it. Cool. Pull back into that last buy to sell, wick entry. Right. That's what we actually called that out in VIP, but it's not going to look that pretty every time. It could look as ugly as EUR JPY, but as long as we understand the concepts, we're fine. EUR JPY, look, higher time frame objective is this blue box. We had the reaction here. Okay. We're just kind of chilling, descending liquidity. We run it. We fail to make a higher high, lower low is formed. Right. We pulled back up into that supply level right here. Boom, and got the entry. It's actually at 144. So 144 is right there. So you got that fill to the T. So the concept is, okay, we've made a high, we've made a low, we've made a high, we've come into this level, we've made a low. All right. Just because on like the 1 minute time frame, we may have broken structure in here doesn't mean it's actually going to go short. Because we're looking at the higher time frame. So we just need to be patient. You're going to have like lower time frame initial breaks of structure because it's going to be the reaction from the level. It's going to be offloading positions naturally, but it doesn't mean that it's going to go short. It could easily break structure, lower time frame, and just continue like that. So we wait. We're patient. Liquidity was run. Boom. We failed to make a higher high. We make a lower low. Imbalance in here. Boom. That could be your entry. So it's not going to look like NCD CAD that pretty every time, but that's sort of what you look for. A slowdown in momentum. Structure shifts, some sort of liquidity runs, failure to make a higher high in this situation, making a lower low, just seeing clear shifts in direction, potentially looking at the VFI for volume price divergence. In this case, I don't think there was any, but I could be mistaken. Let's check VFI. Yeah, in this case, there really wasn't anything. I mean, price was still increasing. Volume was kind of maintaining. little bit of divergence maybe, but again, this is just a confluence. It's not absolutely necessary that we have it for an entry. So something like that may not be that pretty, but hopefully maybe that helps you a little bit. So, all these questions are very good. However, there's no one perfect answer to them every time. Everything's going to be a little bit different, right? It just depends on the setup, but the concepts are going to be the same. The overall explanation is going to be relatively the same. Like when I say wait for price to slow down in your area of interest, wait for, some sort of liquidity grab and then the continuation in the right direction of trend, structure break. That's really what you want to be looking for, but it's going to look different every time because it's going to be different setups, right? So nothing's ever going to be the exact same. So hopefully that helps.
Moving average is 50 exponential moving average. Just an additional confluence. We don't really put too much weight on it, right? If it happens to align, that's just even better, right?
Yeah, I don't really pay much attention to the EMA. It's nice to look at. I mean, if I have an area of interest already and the EMA happens to be in relatively near that area of interest, then just an additional confluence. But if it's not, I don't really care. I don't really need it. All right, guys, I'm going to answer one more question and then we'll be done for the day. I appreciate you guys' time. If you don't have anything else, take care. Definitely stay tuned for more updates that we will have throughout the next couple of weeks. Thank you guys for the good questions. You guys have been a great crowd.
Absolutely.
Let's see.
Really enjoyed it.
Yeah, definitely. Great content. Yeah, thanks, guys. Appreciate it. We are getting a lot of value from your training. Thanks a lot. Confusing how to take profits once I enter a trade. So this is a good question, and I'll just touch base on this one, and then we'll be done. Last one here. Reese, I want to join mentorship soon. Yeah, definitely. We'd love to speak with you, Reese. Prices will be increasing within the next few weeks due to the addition of another course, that site course. So if you guys are interested, we do have a little bit of a promo going on, but after that's over and then prices increase, it's going to, I would recommend just getting in sooner than later. But IG, oh yeah, that's right. Forgot my IG. You guys go follow us if you are so inclined, if you guys are going to support the channel. It's Ariel __FX. So it's a double underscore. Let's see. I just forgot to post it. Sorry, guys. Did ICT teach you? No, he did not. I do respect the guy. He's a good trader. But no, he did not. I haven't really watched any of his videos ever. I don't need to. I mean, I had a mentor that traded institutionally from a bank. So that's really all I needed. All right, let's see. Take profits. Okay, cool. So how I like to look at it, and now this is something that I've kind of just developed on my own. If I'm taking profit, right, let's just say I enter here. We had an entry from 144. We had an entry from the lower time frame break on the 15-minute right there, and another entry from the break or the failure to make a higher high within that supply zone, or was demand. Now it's supply. So 3 levels. Where would I be taking profit on each of them? Now, this is where psychology comes into play, and I'll be discussing this within the psychology series episode 4 tomorrow and the psych webinar on 29th. But long story short, you want to be taking profit at levels in which price could reverse from you. So we need to be looking higher time frame when we do this. If we're shorting off, where is price? Where could it come into that we could see a potential reversal from? Right? You just don't want to be taking profit every 50 pips or after a 1 to 2 or 1 to 3. You can't put that kind of criteria on it, because when you take profit at those levels, you could be missing out on so much more money. What if a 1 to 3 was right here? Obviously, a 1 to 3 for me on this was probably right here, right, with this trade. But why would I be taking profit there? There's no reason why I should take profit there. I should take profit down in here because this is the most valid region in which price could reverse from. And guess what? That's exactly what happened. I took profit at 138. Psychological level right below these equal lows right at the start of this demand. Higher time frame, we're still bullish, right? So higher high, higher low, higher high, higher low, higher high. Even though this is objective, what if we still make a higher high after this, which we are, right? So demand is down in there. That's where I need to be taking profit, 138. So that's where we need to be setting our take profits. But in terms of partials, where could price potentially reverse from you and go the opposite direction. Now, in this case, if you look at the counter trend here, lower low, lower high, supply zone, lower low, lower high reaction, supply zone, lower low, lower high reaction, supply zone. We stop, we make a higher high. This would be that level in which you take partials right there, because price could react from that, have a little bit of that break and retest type of action and continue. That's what we could see. So that's where I took partials. And then I didn't see anything else in here that would potentially reverse my trade on me. And then I had this demand level here. So I only had one partials taken, and then the rest was held to overall profit at 138. And we can see not only did we have wick entries all throughout here, but essentially we had a wick take profit in a sense. Kind of came right into it, pushed right away, and then we went. So you just need to be looking at places in which price could reverse from you. That's going to be the areas in which you want to be taking your partials from. You could have no partials. You could just hold the overall take profit. You could have one partials level. You could have two partials levels. You could have three partials levels. Who knows? And if that's the case, if you have three partials levels and then your overall take profit, that's 4 positions. You need to be splitting up your positions into 4 different, or split up your one position into 4 different ones. If you're risking 1%, having the same entry on 4 different positions, setting the same stop loss, but setting 4 different positions at your different take profit levels. 0.25% a piece. 0.25% times 4 is your full 1%. Because if you lose, you only lose 1%. But that just helps, because if, let's just say, I'm going to make this up here. If I'm entering short right there and I take profit there, there, and there, right? I need to have 3 different positions. Third risk, 3rd% risk, 3rd% risk, 3rd% risk. Why? Because if I lose, I still lose 1%. If I win, then great. If it comes into my first take profit while I'm sleeping, I don't have to take profit manually. It automatically takes me out. Cool. Now, if it goes back up, then at least I made some money. And it's not like, I wake up and price is right here. Now I'm taking partials right here and not right there where I could have been. So that's why I don't take partials manually. I always set multiple positions at the different take profit levels, because I can go about my day and it'll just hit my take profit. I don't need to watch it all the time and get out at the best possible price. It'll do it. So, all right. So it depends on your stop loss. Yeah. With $1,000, what lot size should I use? It's going to be different every time. It depends on the size of your stop loss. How many pips is your stop loss, right? What pair are you trading? Different pairs will have different lot sizes for different levels. So you need to use position size calculator. It's by my FX book. You have to type in your account size, the account currency that you're using, the pair that you're trading, the amount of risk you want to put on per trade, and the amount of pips that your stop loss is. And it'll give you an exact lot size to use, so that based upon that exact volume, if price goes against you, let's say you have a stop loss of 28 pips. If that volume goes against you 28 pips, you'll still lose, if you're risking 1%, 1%. Right? Obviously, with a lower stop loss, you're going to have a bigger lot size. But at the end of the day, your goal should not be to have a 20 pip stop loss or lower. That doesn't matter. It all comes down to risk to reward. I had 128 pip stop loss here, guys. And this will be the last thing I talk about, and then we're done. So I had 128 pip stop loss here. Many people are thinking you're crazy. Well, not really, because or 140. Sorry, 140 pip stop loss. Let's make it even for you. Because that's an appropriate stop loss to place right above the level in which it failed to make a higher high. Enter into that zone, 144. Take profit was down here at 138. So what is my risk to reward? It's a 1 to 4.3. 4.3% return, risking 1% meets my rules. It's good. I don't care if I have 140 pip stop loss. If my risk to reward is there, then I'm fine. Obviously, the lower the stop loss I have, the better, because I'm having a high risk to reward. But you can't just place your stop loss willy-nilly because you want a 1 to 10. You got to place it at its appropriate position. And then see, based upon your take profit level, based upon an appropriate take profit level that we just discussed, is this a good enough risk to reward to place? So you would have to type in, if you lost 140 pips, what lot size would you place that if it went 140 pips against you, you would still lose only, let's say, 1% of the account balance that you have. That's how we calculate risk to make sure that it's consistent every time. Because if it's not consistent, just that problem right then and there, you won't be a profitable trader. You have to be consistent with your risk. I can't stress that enough. yes,
Yep.
definitely risk reward over pips for sure. So hopefully they answered your question. I'm glad you asked that because I know a lot of people are wondering that too. But all right, guys, thank you guys so much for your time. I know I went a little overboard here, but hopefully you guys took some value. And we will talk to you all this Saturday for our last live session. So definitely stay tuned for that. And we'll talk to you in a few days. Take care, guys.
Really. Cheers.